Sambonani Dumelang, family and friends. It is your girl Nthabi here again, back with another episode of the APC Series. If you are a returning subscriber, thank you so much for the love and support that you are showing me, and thank you so much to the 700 subbies that we have in our family. And if you are coming back to the channel and it's not your first time, please don't forget to hit that like button. Please don't forget to subscribe so that you can get a notification on when I'm uploading my next video. But thank you so much, family, for the love and the support. And if you are new to the channel, welcome to our family, and I truly hope that you are here to stay and we can be part of the journey that is the hashtag road to CASA. So welcome, and I hope you stay tuned. So you know how we do it here on the APC series. We got a request to make a video on how to break down a evaluate question for capital budgets as well as a valuation question. So it's going to be a jam-packed session today. So just stay tuned and just make sure that you have your notepad to take down the key points that I'll be covering in this video. So stay tuned. So we're going to start with the capital budgeting, right? So what I noticed is that in the previous papers that I was writing for practice purposes and the case studies, I realized that for capital budgeting, it's either they wanted me to start a capital budget from scratch, or they wanted me to critically evaluate an already provided capital budget on the day. So now we are going to tackle what are the things to look out for and how to better prepare for it during the pre-release period. So the first thing to do is know why are you performing the capital budget, right? You need to know the purpose of the capital budget, because yes, it can be explicitly stated or sometimes it won't even be obvious, but you need to know when to perform a capital budget and how will it help you achieve that objective of that specific task. And the only way to do that is to understand what a capital budget is. So number one, you need to understand the purpose of the capital budgeting, right? Because you need to know that it's an analysis and assessment of an investment project that normally produces benefit over a number of years. But then that is just the definition of a capital budget. We need to understand when we need to perform it, right? And usually it is when you need to assess the viability and the profitability of the investment project by taking into account the cash inflows as well as the cash outflows associated, with that specific investment project over its expected lifespan. You need to also know how it's going to affect the company and the financial health of that specific company before you even make that specific decision. So the next thing to look out for is what decision you need to make. In CTA, they're going to tell you clear as daylight that you need to either outsource or you're going to insource. Whereas in APC, it's not that simple. In APC, you'll be getting a document or an email where they're going to tell you these are the decisions that we need to make. However, there are certain things that you need to consider, the risks, the stakeholders, and all of that. Sometimes it's just one decision that you need to make. So you need to be able to apply professional judgment. And that means you need to be able to know what decision you are making, as well as how that decision impact us as a company, impact our stakeholders, and also in the role that you were given. Sometimes they'll tell you a financial director or financial manager or a newly qualified accountant, right? You need to understand in your current position, how will I be able to use a capital budget to make a viable decision that is going to help the organization as a whole, and also create a bigger picture and a holistic picture for the audience that is asking me to make that decision. Then after getting the pre-release information, right, you're going to read it and then okay, capital budgeting is what I need to do. So what do you do with that information? You first also need to look at the methods you are going to use. Capital budgets has many methods, right? You have your payback period, your discounted payback periods, your internal rate of return, as well as your NPV, right? You need to work with the information that you have and select one method that is going to help you achieve that specific objective. Remember, we spoke about the objective in the previous point, right? So you're going to look at that information and see, okay, NPV, it's my best option. But you can't just say that, right? Because your audience will not know that. In your pre-release now, that's when you're going to go to research and you're going to ask your AI tool or the internet, what relevant or what effective method for capital budgets can I use for the specific decision that I need to make? And you're going to try to personalize that question according to that industry, and it will let you know. But you need to know, if you're using NPV, why are you using NPV, and how will it help you achieve the objective you are trying to, obtain, and the knowledge you're trying to gain in making that decision. How will the NPV method assist you in making an effective decision that is going to benefit the company holistically? You not only need to write a lengthy email on why you're selecting NPV or IRR. No, you need to understand why you're picking that specific method, because that is the foundation and the basis of your response. You will ask the AI tool and the internet, what is the purpose of this method? What is the reason why one would choose the NPV method or the IRR method or the payback period method? Why would it be relevant for me to use it in this specific case study with this specific information, right? Because there is no point in trying to just theory dump CTA things when you're not making it relevant. Yes, you must perform a capital budget, but why are you doing it? And why are you using the specific method? Everything needs to make sense. You can't just rush to calculations and numbers. You need to understand why you are doing certain things. That's where you apply professional judgment. And then the next thing you will focus on is the pros and cons of that specific method, right? Because remember, on the day, you don't know what they're going to ask you. So the pros and cons is just a safeguard, right? You need to understand pros for NPV or the IRR that you're going to use. Let's say in this case study, we are going to use the NPV method, right? You need to know what are the pros of using the NPV method? What are the cons of using the NPV method, right? And you need to weigh your options. So let's say you are stuck between two methods. Then you're going to go on the AI tool to list the pros and cons of each, and then you're going to select the best one. Obviously, you're going to select the one that doesn't have a lengthy list of cons, and the one that goes against the vision and the mission and the objective, the strategic objectives of the firm, right? So you need to make sure that you are understanding the pros and the cons of each, so that you can substantiate when they ask you what method would be better, because on the day we don't know what's going to come out. So that is just a what if as a safety precaution that I personally used, right? So number one, it was the purpose of the method and the pros and cons of that specific method, because I need to back up why I'm choosing that method to begin with. And then the most important thing, you need to understand the calculation of that method. There's no use knowing which method to use, like the relevancy of it. There's no use knowing the pros and cons of it if you do not understand what goes into that method, right? So the next thing you need to do to help yourself is have a specific template. The capital budgeting template, guys, we know it from CTA. We've been doing it from CTA, ITC onwards, right? So what you are going to have in your file as one of your cheat sheets in the finance section in your APC file. I mentioned the cheat sheets in my APC file preparation video. Just go check it out. And one of the cheat sheets I had for finance was a capital budgeting template. I needed to remind myself that, listen, this is how it must look like. So if I'm asked to critically evaluate it, I'm able to identify things much easier. Like depreciation is not supposed to be there. So if maybe I forgot that depreciation is supposed to be considered on the day of the exam, then I know that in my file, it's going to back it up, right? I'm going to immediately identify that no, depreciation is not supposed to be considered, right? So that is where you need to create your capital budgeting template, because that is going to save your life. It changed mine. So let's say on the exam day, they tell you that here's the capital budget, critically evaluate it, right? We don't have to do it from scratch, right? So what do, right? Sometimes when I look at a critically evaluate question, I remember I used to fail it dismally until I went back to my mentor, and then they're like, there are 3 things that you need to look at for critically evaluate. Number 1, it is what is right. You need to say, okay, this is correct. Number 2 is what is incorrect. You need to state, this is now where your theory dumping comes into play from CTA, right? You're going to say that A, B, and C is incorrect. But You can't just say it's incorrect. You must state the reason why it's incorrect, right? Because SACA knows it's incorrect. They're not telling you, they're not asking you based on your CTA theory dumping. They are asking you based on a professional level. You need to be able to understand why certain things are included, why certain things are excluded. You need to provide justification, right? Because sometimes you're going to speak to an audience that does not have that specific knowledge. It is not assumed knowledge. So you need to break it down like you're speaking to a child, right? You need to break everything down like a working paper. You need to document in a way that your work is re-performable. So that is what we're trying to do when we are responding to an audience that does not have that specific background. And then the last thing that is the third thing is what is missing, right? You need to be able to identify what they did not consider in the calculation, because critically evaluate is not only what is good, what is incorrect, but it's also what is missing. Because remember, it's just like auditing. An internal control deficiency is not only when a control is not working, but it's also when a control is missing, when a control is omitted and it's not there. So now I'm going to give you a list of things to look out for, right? This is a list that I came into the exam venue with on my cheat sheet for capital budgeting. This list was there. I had to use a checklist physically, like taking things when I'm critically evaluating a capital budget question, right? And the first thing I had to look out for was time value of money. We are all familiar with TVM. We've heard it from second year in undergrad until, right? We are familiar with TVM. And TVM, we know it very well, where it recognizes the value of money and that it changes over a period of time. So 10 rand today is not gonna be 10 rand like in 10 years, right? The value of that amount will change. And we need to consider TVM in capital budgeting, because by discounting future cash flows back to their present values, we can assess the attractiveness of that investment project, right? And determine the impact on the financial position of the entire entity. Because imagine now you are not discounting certain things. You're not giving a true reflection of that thing. Because remember, in capital budgeting, we are assessing the attractiveness of that decision. And we need to assess whether we are going to make that investment or not. We are going to take on the project or not. So when we are not discounting certain things, then we are distorting that financial information. We are distorting that financial impact that decision will have on our entity. So it's not giving a true reflection of that impact. So imagine now you are making a decision like a rookie, basically, because your manager will say you do not consider the financial impact in the future, right? You do not discount it to the present value, and that could basically just rate you as incompetent in a way, because we already know that TVM needs to be considered. So just make sure that you are taking TVM into consideration. Then the next thing is to basically consider the sunk costs, right? When you're looking at the capital budgeting, you need to identify the sunk costs, because if they were included in the calculation, then you know that that is incorrect. We know that our knowledge says sunk costs are not relevant costs. So when they're telling you that the project started in 2020, but then costs were incurred in 2018, 2019, and they were not relevant to that specific project, then why are they being considered, right? So sunk costs, obviously we know they're supposed to be ignored. So if you see a sunk cost, then you must state it is incorrect and these are the reasons. Then the next thing is, what are the costs incurred at the beginning of the project? That is relevant, because remember, relevant costs are costs that you incur because of that decision, as a result of making that decision or taking on that project, right? So sometimes you're going to incur costs in the beginning, like buying a specific vehicle or buying property or buying something. That is costs that you incur at the beginning of the project, which are relevant. So you need to ask yourself, with the cost incurred in the beginning, was everything considered, or was at least one cost like excluded, and why was it excluded? So look out for those things. And then the next one is, will there be a disposal of an asset, be it at the beginning of the lifespan of the project, in the middle, or at the end? we need to take that into consideration. Is something going to be sold? Because if it's going to be sold, we need to take into account the sale value of that specific asset being sold, right? Doesn't matter when it's going to be sold. We still need to take that into consideration. And then the next thing that we need to look out for are irrelevant expenses or irrelevant items, right? I explained that something is relevant if you incurred that cost because of that decision, right? If you know that rent is 8,000, whether I make this decision or not, that is not relevant because rent will forever be the same. If a cost is incurred and it's at a constant amount, and regardless of whether I make that decision, that cost is still going to be there. Ntase, it's not relevant. It's not relevant. So, yeah, that's something that you need to ignore, right? Because it's not relevant. And another thing to look out for is opportunity cost, right? Opportunity cost is basically revenue you would have made if you hadn't made that decision, right? Revenue, it's basically lost revenue. If you are losing revenue because of the decision that you are going to make, you need to take opportunity cost into consideration. Just like how saved expenses. If maybe when you are choosing plan A and plan A is making you reduce petrol ka 10 rand, you need to take that into consideration because saved costs is basically as a result of me making that decision. So your saved costs will be added back, right? And your opportunity costs, because it's lost revenue, it will be deducted from the capital budgeting. And then the next thing on your checklist is looking at the rate. You need to ask yourself, was the correct rate used? We know it needs to be WACC. So you need to check, was WACC used? And if not, what is the reasoning behind them using a different rate? And if it is valid, then you need to take that into consideration and state, I can see that the WACC rate wasn't used, but because of the justification and everything, I can see that it is a relevant rate to use, right? Alternatively, it should have been WACC, but then because of the circumstances and whatever reasoning that they provided, after assessing that reason, if you think it's valid, then state that it's valid because of A, B, and C. You can't just say it's valid. You need to explain why it's valid, right? And then the next point would be inflation. Everything inflates throughout years and years and years, right? The amount will never be the same at a constant rate. You need to inflate things. So what will help you is that during this pre-release period of the 5 days, you need to ask the internet, what is the current inflation rate in South Africa or whatever country that this case study is taking place. You need to ask the AI tool what inflation rate is relevant in South Africa, and if it's 6%, then it needs to stick to that 6%. Because let's say in the case study, they are giving you inflation, 15%, and you don't know where it's coming from, right? So you see in your research that it's supposed to be 6%. Now you're going to assess the reasonability of that inflation rate, right? Now that's where you show the marker that you did your research, and this is how you are incorporating it and applying it to the case study on the day, because you got the information on the day and you also got the pre-release, and now you're marrying the two together, right? As well as integrating the research that you have done. It's you showing the marker that yes, I know that inflation is supposed to be taken into consideration. However, let's also assess the reasonability of the rate that is being used, because now you are able to show the marker that you're not only competent but also, highly competent because you are bringing in actual information on the internet that is telling you that inflation in South Africa is at this rate. And then the last thing to look at is the tax implications, right? There's so many times I forgot tax. I'm not gonna lie. I forgot tax and capital budgeting, and it was not cute, Shem. I failed that question because I forgot it, right? So I had to make a checklist of the tax implications, and number one, it had to be gross income. So everything that I received as revenue, I had to include it in the gross income if it met the definition, of course. And then second thing, obviously, is your Section 11A, your expenses that are not capital in nature, right? Everything that I obtained or incurred, rather, in the production of income, I would deduct it under Section 11A in the tax section, right? You know, in the capital budgeting, you have the main table, and then at the bottom you have the tax implications to show them separately and calculate them separately. That's the table I'm talking about. And then you're going to also consider the wear and tear, your section 11E, and then your special depreciation rules, right? Your section 12, you're also going to consider that, right? Your special depreciation rules for capital assets, right? Because we know depreciation is not taken into account when it comes to the cash flow aspect of the capital budget. However, you have to take it in consideration for the tax implications. And then also remember that if you had to sell an asset or sell something at the beginning or during or at the end of the lifespan of the project, there has to be something called a recoupment and CGT under the tax implications. So whatever sale that you had made, you have to also recognize the tax implication of that in the tax calculations of it, right? So you need to consider your recoupment. You need to also consider your CGT. So that's something that you need to take and write down, because it's often a thing that one forgets. I know I forgot it, so that's why I had it on the list. And what I'm mentioning is something you can do in the pre-release period. It's not even on the day of the exam. This is something you should have already done in the 5 days leading up to the exam period. You already can see that capital budgeting has been explicitly triggered. Or if it's not something explicitly triggered, then prepare for it in this way. But this is what you need to do in the 5-day period. Do not wait for the numbers or the calculations. Sometimes you can just create numbers in your little research file, because it's just going to guide you that, okay, remember to add inflation. Remember that you need to add this, you need to subtract this, and all of that. Just have a specific template with whatever numbers that you have in the case study, or even include or X or Y or P, include that as an example, right? So that you can get a basic idea of what the capital budget should look like for this specific question. So everything mentioned up to now is what you can do in the 5 days leading up to the APC exam. And then for valuations, we're going to follow a similar approach, right? With valuations, you need to understand the purpose of valuations. You can't just say, no, this is a valuations question, it's a valuations trigger. Why is it a valuations trigger? Like, why are you saying that I need to value a specific asset or business, right? What are you trying to achieve? So the first question you need to ask yourself is, what is the objective of this task? And if I answer it using the valuation route, what am I trying to achieve? And just like the capital budget, you need to understand the various valuation methods, and you need to understand why these methods are used. This is by assessing the purpose of the valuation method, what it's trying to achieve, as well as the pros and cons. You need to have a lengthy list of the pros and cons so that you can do a process of elimination to see which method is going to be suitable for you for that specific task. Because there's no one size fits all when it comes to these things. You need to assess the information in the pre-release information and the case study and see what method will work best for the specific entity. Just do your research and look at your CTA notes to see, okay, if it's in this industry and this is what the entity is trying to achieve, then this is the method that I need to go for, right? You need to understand the why before you get to the numbers. And then you also need to understand the list of what to include and what to exclude. So obviously this will be different for each valuation method, but you need to have a standard template for each, so that if you are going into that exam and you're still confused which method to use, bring all of them, but in all of them, make sure that the template for all of them is there. You can't just focus on the discounted cash flow method and then on a template. What are you doing? You see, so you need to come into the exam venue with the templates that you're going to use. But remember, if you are going to do relevant researching, you need to walk into the exam venue knowing the exact method you are going with and only having that one method. Because when you get there, there's going to be so much information dumped on you that you're going to feel overwhelmed and you're going to be confused. So you need to make sure that you have concluded on the method you're using in the pre-release period, so that on the day you already know this is what you're set on and this is the reason why you're selecting this method, and there's no further confusion that is going to happen on the day. And then the general principles, obviously you need to know TVM must be included, and also the rate to use. Like we get very confused, Shem, on the day, and just save yourself the trouble. Just make sure that you already know the rate you're going to use. If you get information that will help you calculate that rate, then do it while you're in the pre-release period. If you get information that is like almost full, like almost complete, perform that evaluation during the 5 days. Don't wait for the information to come. Then work with information that you have. There's so much information at your disposal when it comes to the pre-release information that I feel like I overlooked personally. I overlooked most of the information, and all of it was there. Even if it wasn't there, I would use the set formula and then have bo X, bo Y, bo R, bo S to fill in the blanks. Even if I'm not having a complete calculation, I will know, okay, S, I must do S for a period of 3 years, because it's going to be also integrated in the projection year that I'm going to do, right? So just make sure that you have a complete template that has a number or alphabets to help you just vision this template and what you need to do on the day. It'll solve all of your problems, Jam, with valuations and capital budgeting. It will help you, because there's so much stress you have on the day. Just try to minimize it, right? And this is one of the ways you can minimize the stress, right? APC is possible, and this is just to make sure that your life is made easier with templates as well as preparation during the 5 days. So like I mentioned, APC is possible and APC is conquerable, guys. You know, you need to claim that victory. You need to claim that success. It is literally a few months away before you write the big December APC exam, and I know that you are working so hard. I know that you are trying your level best to make sure that you are at that C level or that HC level, and I know you can make it. So just make sure that you invest in your time and you invest in the resources readily available to you. So I'm just begging you guys, I'm begging you now. Go create your valuations templates, your capital budgeting templates now. After watching this video, go create those templates. They will literally change your life and also change your perspective on how to critically evaluate these questions. And just make sure that, you know what, you are ready for that APC exam. So we have reached the end of our episode, and thank you so much for tuning in. I hope that it was, you know, able to bring you some insight and provide some clarity on what to do in the 5 days preparing for the APC exam when it comes to valuations and capital budgets. And if you have any questions, please don't forget to leave a comment in the comment section, because chances are you are not the only one with that specific question. And if you still require one-on-one interaction after you have left the comment, then please do email me on apcplug101@gmail.com. So we have reached the end of our episode, and I hope that you enjoy the rest of your day. Bye.